Okay, so welcome to this new episodes for the video series Conflict of Interest, right? On the previous video, I have basically show you, right, how brokers first make money off you, and what is a normal, typical income stream, right, for a typical retail brokers, right? And you probably have noticed that there are basically three types of income stream, right, which is the spread and commissions, the OTC gain, and the financing turns, right? And one of the most profitable income stream, right, is really the OTC gain section, right? So it basically make money off you when you are losing trades, right? So your brokers will basically trade against you if you are in the A book, right? And they will make an enormous amount of money from that, right? Because of the 90-90-90 rules, right? Now, in order to increase their success rates, right, the brokers will know that in order for them to make as much profits as possible from the OTC gain, right, is in their best interest to provide you with some false information, right? So in this video, I'm going to I'm going to show you what is some of the false informations, some of the misleading informations that you should avoid, right? Information like this, when provided by your brokers or by other guy that have a conflict of interest with you, right, you should really just ignore it and do exactly the opposite. Okay, now, so the first major misleading information is that they will always be very kind to provide you with some strategies, some trading strategies, right, on their trading platform, right? Some of the most common will be day trading, or will be scalping, right? Or nowadays, because more and more regulations is coming into the facts, right? So retail guys is really starting to lose interest in day trading, right? But there's still a chunk of retail guy, right, who still believe that day trading is a profitable strategy. So a very commonly used strategy will be trading the economical news, right? Trading like NFP, right, like interest rate decisions, right, or employment rates, unemployment rates, right, or the inflations, right? They will teach you, telling you basically that, well, you should long the currency, right, if the numbers is better than expected, or you should short the currencies if the number is worse than expected, right? And another very a very common strategy that your broker will recommend you is really the swing trading strategy, right? And swing trading by itself is kind of profitable, right, if you are using it on a higher time frame, right? So I'm talking about daily charts, weekly charts, monthly charts, right? But if you are using swing trading strategy on a lower time frame, let's say 1 minute charts, 5 minute charts, 10-minute charts, or a 1 hour chart, well, you are basically day trading and you are basically short-term trading, right? Because the chart has zoomed in, because the way the chart is presented, the trend, the swing that you will realize that you trade is really just a very small portions, a very small movement in the daily move, right? Strategy like this, you will realize that strategy like this are usually short-term trading strategy, right? Because brokers and as well as professional traders, we know that short-term trading strategy like this has the highest chance to lose money, right? So it's like you are opening a casino, right? And the best game that you want to put in your casino is really the roulette, right? If you study the probability of the roulette, you know that your first play on the roulette is your highest and is your best bet on winning the casino, right? And the more you trade, the more you bet the roulette, your probability of actually winning will be decreasing, right? So for the brokers, they understand the same thing, right? That's why they are trying to convince you, trying to sell you that professional traders trade on short-term trading strategy, right? Which is not, right? So you should really first do the opposite, right? Ignore this short-term thing, do the opposite, right? And you should do a relatively long-term trading strategy in the trading spectrum, right? Because you should do your research on that economic on that particular assets, right? And then you open the positions based on your research and hold it for 1 to 3 months, right? Because data show us that between 1 to 3 months the volatility is the best, right? 1 to 3 months is really the sweet point for traders, right? Because you will have the most exposure to the volatility, you will have the most opportunity and risk to the volatility and to the assets, right? So you should really hold it for 1 to 3 months, right? And comparing holding a position 1 to 3 months, right, to all kind of day trading is a relatively long-term trading strategy, right? And of course, if you are comparing like 1 to 3 months of trading strategy with like an proper investment that you hold for years, then trading is really kind of short-term thing, right? It depends on how you compare, right? Okay, so this is the first thing. And another very common misleading informations that your broker will tell you is really that the currency markets or the financial markets is a ATM machine, right? And you can just go in, right, and you trade maybe for an hour or two, right? And by the end of the day, you can just withdraw the profits out from the trading account, right? So they are basically selling you this concept that okay, trading is just kind of like a job, right? A 9 to 5 job, right? Where you just go in and you just do all the necessary thing for like 1 to 2 hours, right? And you will get paid. The truth is, people who get paid, if you do that, if you really do this, people who get paid are your brokers, not you, right? Because if you have been in the trading world for quite some time, you know that trading or even scalping, right, for 1 to 2 hours a day is not going to make you a lot of money, especially in the current market's volatility, right? Because currently the market volatility is so low, right? Although recently the volatility has increased due to the COVID-19 outbreak, but compared to the historical volatility, we are still at a very low, right, level historically. So in a low volatility environment like this, not to mention that you want to day trade, right? Even you sell option in, selling options in this kind of environment, you're not going to make money, right? Because the volatility is so low, right? And they try to convince you this idea that okay, the financial market is a ATM, and I can just go in and trade, kind of work, right? Work for 1 to 2 hours, and boom, I will get my daily income, which is not true, right? You know that is not true, because in order for a trade to completely in order for us to completely take advantage of the trades, you will need time, right? One day or 1 week is really not enough, right? It's really at least a month, right? Because a profitable strategy is really catching the fundamentals, economical trend of that assets, right? That's why professional traders, we always hold our positions for 1 to 3 months, right? And another very misleading concept that they will show us, that the brokers will show you, is that an image, right, of a quote unquote professional traders, right, sitting in front of the desk, right, and is simultaneously controlling and watching 2 to 3 or 4 to 5 different screen, right, 4 to 5 different monitor screens. And picture like this, image like this, is going to make you think that, okay, this is how professional traders trade, right? That's why I need to do that. In fact, if you go in to any investment bank, right, or any hedge funds, the maximum screen that you will saw is really just 2 screen, right? One is really for the main data analysis, right, and another one is for the portfolio monitoring, right? If you have a very, very huge portfolio, right, and you do need to have multiple screen in order to be profitable, right? There's no correlation with that, right? Unless they are doing the what you call the market making, right? Then there's a totally different thing, right? But even nowadays, market making is done through algo trading, through the robots, right? So this is 2 main misleading informations that your broker is telling you, right? So what you should do is really do the opposite, right? First, do not short-term trading, and the second thing is that do not consider that the financial market is an ATM, right, where you can go in and work for 1 to 2 hours and you get your daily pay. No, it doesn't work that way, right? If this is how the financial market works, everyone in the world will be very successful in the trading world. Okay, so this is just a false information provided to you by your brokers, so that you can make as much mistakes as possible, and eventually makes you to lose as much trade as possible, so that the brokers who is taking the other side of your trade is profitable. Okay, right? So okay, remember to subscribe my channel, right? If you haven't, just hit the bell, and remember to leave me the feedback, right? Because I will go through your comments. And recently I just shot some video answering some of your questions, right? Some question is really good questions, and some other questions is asking it's really it's really some bad questions, right? But still, I have done some videos and I've answered those questions on my videos, right? So you can just go and watch it once the video is published. Okay, so yeah, I'm gonna see you on the next video.